Hello everyone, welcome to EduTap and welcome to the Finance 360 degree session, and today we have the revision session for the April 2024. Okay, so this is all the sessions that we have done in the April month. All these sessions we will be revising today. Okay, and I have brought for you the important MCQs from these sessions. So let's get started without any delay. Okay, so good morning everyone, hello everyone, and do subscribe to the YouTube channel of EduTap so that you can continue getting these relevant videos, as well as join our Telegram channel so that you can get the PDF of today's session. Okay, so the PDF of today's session you will get it in the Telegram channel, and the link for the Telegram channel is provided in the description box below. Okay, so now good morning everyone, welcome to the session. This is the first question, and do tell me, is the brightness okay? You are able to see the question as well as my voice? Is it okay? Everything is fine? The brightness is fine? So try to give the right answer of this question. So this is the question regarding the which of the following statement is incorrect regarding the SRO framework. So recently Reserve Bank of India has released the framework for the self-regulatory organizations that will be working for a particular domain. Okay, so for fintech sector, for the banking sector, for the NBFCs, there will be the SROs that will be present, the self-regulatory organizations that will be present. Okay, so now is it fine, the brightness? So here you have to tell that in regards to the framework for the self-regulatory organizations, which of the following statement is incorrect, is or are incorrect. Okay, so first of all, the minimum membership that may be prescribed by the Reserve Bank of India to the SROs, they have to be achieved when the SRO is getting the application, is getting the registration. But if the membership is not available at that time, so at least within 2 years, not exceeding 2 years, the membership has to be attained by the SRO, so that the SRO can actually represent the whole of the domain, the whole of the fintech sector or the banking sector and such. Encourage a culture of research and development within the sector. So yes, SROs, they will be helping the members to achieve the compliance, to achieve the highest standards of compliance and self-governance, as well as the SROs will promote the research and development in the sector. So this is correct. Collect and share the relevant sectoral information to the government. No, the sectoral information has to be provided to the Reserve Bank of India, because the RBI is the one that is making the policies for the different sectors, the fintech, the RBI, and the banking and the NBFCs and such. Okay, so here the answer is actually, which is the incorrect statements, which is or are the incorrect statements. So first and third are the incorrect statement. So here the answer is C. Here the answer is C. Okay, so read the statements very carefully. It has been said in the objectives of the SRO that the SROs, the self-regulatory organizations, will be collecting and sharing the information to the RBI. So the sharing of the information has to happen to the RBI. So the SROs, they are the connecting line in between the Reserve Bank of India and the players in the market, the fintech players or the banking players. So SROs is working in the middle of these two segments. So SROs will be connecting the players in the market with the Reserve Bank of India. So I hope you will be more careful when you are reading the question as well as when you are reading the statement. Okay, so give the right answer of the coming questions. Learn from this mistake, that read the question and the statements very thoroughly. Okay, so now the next question is a very easy question. I hope you will be easily able to answer this question, and this is a question that has come in the previous year also, in the 2023 RBI Grade B examination. So try to give the right answer of this question. So here you have to tell that which are the criteria for an insurance company to be considered domestic systemically important insurers. So domestic systemically important insurers, recently the list has been released in which the three companies, the 3 insurance companies are considered the domestic systemically important insurers. Tell me the name. One is LIC. What are the other 2 companies? So you have to tell me that, as well as selecting these domestic systemically important insurers means these are the 2 big companies to fail. If they are failing down, that means the insurance sector will have a big blow. Okay, so that's why these are very important. They have to follow higher regulatory norms, as well as these are too big to fail. So that is LIC, GIC and New India Assurance. Okay, so these 3 are the domestic systemically important insurers, and they are selected on the basis of their size, on the basis of their market importance, and on the basis of their domestic and global interconnectedness. So that's why 1, 4 and 5 is the right answer. So everyone has given the D as the right answer. So that is correct. Okay, very good. So that is, these are the 3. RBI has released the list recently in April 2024, and you can see that these are the domestic systemically important insurers that are too big to fail, and they are too big or too important to fail, and they are selected on the basis of the size, market importance and the domestic and global interconnectedness. Now coming to the next question, that is, recently the scores 2.0 has been released. What is the full form of scores? As well as, so that is given, SEBI complaint redress system is the scores, SEBI complaint redressal system, so that is scores. Now you have to tell me that which of the following are the features or are correct regarding the scores. Okay, which of the following statements are correct regarding the scores, that you have to tell me. Okay, try to give the right answer of this question. So the first statement is saying that the scores is an offline system where investors in the securities market can lodge their complaints against listed companies and SEBI registered intermediaries. So what is the problem here? What is the problem in this statement? Can anyone tell me the problem in this statement? Anyone can tell me the problem in this statement? That yes, investors can lodge their complaints against the listed companies under the SEBI, against the SEBI registered intermediaries, but it is an online system. Very good. Sorish, it is an online system. It is an online system and not offline system. There is the web URL that is present, as well as the app that is present for the scores. Okay. Next is that under the scores 2.0, there is the reduction and the uniformity of the timeline that has been brought for the redressal of the investor complaints across the securities market, and the timeline is 21 calendar days. Okay, next is providing 2 level of review. So first of all, your complaint will be addressed by the concerned regulated entity. Let's say it is some kind of stockbroker, or it is some kind of depository participant. So first of all, the concerned regulated entity under the regulator, under the SEBI, they will be addressing your complaint. But if you are not satisfied, then you can go for the review, the first review from the designated body. Okay, from the designated body. Then the second review can happen from the SEBI itself. So the third statement is actually correct. First and second statement are wrong. That's why the answer is 3 only, because you had to find the correct statement. Okay. So we have discussed all about the features of the scores 2.0. We have discussed about the scores, which is an online system that is present through the URL as well as through the app. Okay. Next question, try to read it and try to answer this question. Anyone? Okay, so I can see the answer E. Okay, many of you are giving the answer E, so that is absolutely correct. So as per the second advance estimates, recently in April 2024, there is the Monetary Policy Committee statement that is released, as the Monetary Policy Committee meeting has happened recently. In this statement, it is said that as per the second advance estimates, real gross domestic product expanded at 7.6% in the 2023-24, and this data is released by the NSO, National Statistical Office. Now, the MPC has projected the real GDP growth for 2024-25 at 7%. So, the NSO has given the data regarding the previous year, 2023-24, previous financial year, and the MPC Monetary Policy Committee has given the projection for the coming year. So, that's why the answer is 7.6% and 7%. So, all of this we have discussed about the MPC, the committee that was the decisions that have been taken, that the repo rate has been kept constant, SDF has been kept constant, the MSF has been kept constant. So all of these decisions we have discussed already. Okay. Next question is regarding the NBFCs and the banks. There was a statement that was released by the Reserve Bank of India that in regards to the investment in the alternative investment funds. Now you have to tell me that which of the following statement is incorrect. Which of the following statement is incorrect regarding the announcement by the Reserve Bank of India for the investment in the alternative investment fund that the banks and the NBFCs do. Okay. So try to give the right answer of this question. Okay, so I'm getting the answer D. The first statement is that the downstream investment exclude the investment in equity shares. That is correct, because see, first of all, the investment that is happening. What is the problem here? That the banks are giving loan to this company X. Okay, so let's say the bank is giving 100 crores of loan to this company X. Then the bank is investing in the alternative investment fund that is investing in this company X, and that is further giving loan to the company X of 100 crores. So in total, the bank has done what? The bank has got the exposure to this company X of 200 crores, or this is also the evergreening of loans, that the bank is directly giving loan to the company X. The bank is indirectly also giving loan to the company X to return the previous loan. This might be happening. So that's why this is a troublesome situation. That's why when the banks and the NBFCs are doing the investment in the alternative investment funds, they have to see that there is no downstream investment that is happening to the debtor company of this bank or the NBFC. Okay, there is no direct investment that is happening in the company X, in the debtor company through the alternative investment fund. But it has been said that the investment, if it is happening for the equity shares, because they are the shares that you are getting, so you are getting the value also. So the downstream investment excluded the investment in equity shares. That means the bank is doing the investment in the AIF for the investment in this shares of the company X, that is allowed, because they are not the debt. They are not the debt directly. Okay, so this is allowed, but the hybrid instruments, they will be included in the downstream investment. So remember that the downstream investment exclude the investment in equity shares, but they include the hybrid instruments, because the hybrid instruments include the debt also, the debt instruments also. So that's why this is wrong, because they do not exclude the hybrid instruments and the equity share. They only exclude the equity share. They only exclude the equity share. So this is wrong. Provisioning shall be required only to the extent of investment that is done by the regulated entity in the AIF scheme that is further going to the debtor company. So only that much of the provisions will have to be kept, not on the entire investment. Okay, let's say that this AIF is also investing in the company Y or the company Z that do not have any relation with this bank. So this kind of investment will not be required to have the provisioning. The provisioning is only for the downstream investment that is leading to some kind of problem, that is leading to the further loans to the same company which the bank has already given the loan to. Okay, so that is the idea, that provisioning is only required to the extent of the investment that is happening by the regulated entity to the debtor company. Okay, and that is the investment that is in the hybrid instruments or the direct debt instruments, that is the downstream investment. Investment by the regulated entities in AIFs through intermediaries such as fund of funds and the mutual funds to the AIFs. So if the bank or the NBFCs are doing the investment through the intermediaries, they are not under the circular. They are not included in the scope of the circular. So this is correct. This is also correct. Only the first statement was wrong, and that's why the answer here is the 1 only. Okay, so the answer here is D, that is 1 only. So I hope this is understandable. Now this is a very complicated information. This is a very complicated notification that was released by the Reserve Bank of India, but I have taken a complete session on this, that the relief that is given to the banks and NBFCs in regards to the investment in the AIF. So what does this mean and everything we have discussed in this section. So you can read, you can go through that section. Okay. Next is try to answer this question. Recently, the Reserve Bank of India has released a notification for the key fact statement. Okay, very recent notification has been released on the key fact statement. So which of the following is correct in regards to the, incorrect in regards to the key fact statement, that you have to tell me. Okay. So here shall form a part of. Okay. So first is KFS shall be written, key fact statement is provided to the borrowers. So the borrowers are fully informed regarding the details of the loans that the borrower is taking. Okay. So in this regard, the key fact statement shall be written in a language understood by such borrowers. Key fact statement shall be provided with a unique proposal number as well as it have a validity period. So key fact statement that is given to the borrower, the acknowledgement has to be the providers of the loan, the banks, the NBFCs have to get the acknowledgement. So the validity period of the KFS is 3 working days for the loans having tenure of 7 days or more, and a validity period of 1 working day for loans having a tenure of less than 7 days. So that is the idea. Okay. The KFS shall also include a computation sheet of annual percentage rate as well as the amortization schedule, and the annual percentage rate should include all the money, all the charges, the interest rate as well as the other charges also. So all the other charges should also be included in the APR. Okay, so this statement is actually wrong. Credit card receivables are exempted from the provisions of this guideline. So that is correct. All the other statements are correct. Only the D statement is incorrect because the APR should include all the charges. Okay, so this is the answer here. I hope you have understood this clearly. Okay, so we have discussed this details on the key fact statement. If you have any confusion in the details, you can go through the details through the session. Okay, so I have taken a complete session on the key fact statement. Now coming to the next question, that is in regards to the counter-cyclical capital buffers. Counter-cyclical capital buffers. So these are the buffers that the banks will have to keep if there is any kind of troublesome situation that is going to come, if there is any kind of downturn that is going to come in the economy. The Reserve Bank of India has to inform the banks to maintain the extra buffers, extra capital buffers that are known as the counter-cyclical capital buffers. We have discussed about the CRAR, the capital conservation buffer, the counter-cyclical capital buffers. What are all of these? What is the CT1, AT1? So we have discussed this in the session that I have taken just a day before. So you can see that session. But here, let's discuss the question. So it is saying that the credit to GDP gap shall be the main indicator in the framework. So that is correct. The lower threshold for starting the counter-cyclical buffer should be 3% and with reference, with relationship with the incremental so here it should be, sorry, it is a mistake from my end. It should be the GNPA ratio. Okay. So provided its relationship with the GNPA ratio. Okay. So the lower threshold should be 3% of the credit to GDP gap and with relationship with the GNPA ratio. Now CCCB may be maintained in the form of CET1 capital. So that is correct, from the 0 to 2.5%. So the counter-cyclical capital buffer can be in the range of 0 to 2.5%. The lower threshold of the credit to GDP ratio is 3%. And the upper threshold is 15%. So the CCCB decision would normally be pre-announced with the lead time of 4 quarters by the Reserve Bank of India. Okay, so here the wrong statement is actually the D statement. For all the banks operating in India, CCCB shall be maintained on the solo basis also as well as on the consolidated basis also. So here the answer is D. Okay, here I had to write the GNPA ratio. So this is the full idea. We have discussed the counter cyclical capital buffer in the detailed manner, where we discuss that what are the norms, what are the thresholds, what are the indicators, when the RBI can start it, what is the aim of the counter cyclical capital buffer and everything. Okay. Yes. Now the next question is that what is the upper threshold? So the lower threshold of the credit to GDP gap is 3% if the GNPA ratio is also high. With reference to the GNPA ratio, if the GNPA ratio is also high, then the RBI can think of starting the counter cyclical capital buffer, and it will start from 0% to 2.5%. The buffer will be from the range of 0% to 2.5%. The upper threshold of the credit to GDP gap is 15%. That at the 15%, there should be the highest of the counter cyclical capital buffers that have to be maintained by the banks. So here the answer is 15 percentage points. Okay. So now coming to the next question, that is you have to tell that which of the following statement is correct in regards to the liberalized remittance scheme. So first of all, the liberalized remittance scheme, this is for the resident individuals, so that they can take their money outside, they can remit their money outside to their children, to the for the hospital bills to be paid in US or in some other country, or to travel to abroad, they can exchange their money. So for all of these purpose, there is the liberalized remittance scheme. So the liberalized remittance scheme of the Reserve Bank of India allows the resident individuals who are adults as well as minors only to remit. So it is adults as well as minors also can remit their amount outside. Okay. So next statement is that the upper limit of the remittance is $250,000 per financial year. Remittances by the resident individuals for purchase of foreign currency convertible bonds, they are not allowed. The foreign currency convertible bonds are not allowed by the resident individuals under the LRS. So this is also wrong. In a sole proprietorship business, the owner of the business cannot remit the funds under LRS. This is also wrong, because sole proprietor means sole owner, that is the individual. So he can send the money, he can remit the money under the LRS. Only the E statement is correct, that the scheme was introduced on February 4, 2004 with a limit of $25,000. So the E statement is correct here. Okay. So I hope this is clear. The E statement is correct. Here you can read that these are the prohibited items under the liberalized remittance scheme. So the convertible bonds are also prohibited under the liberalized remittance scheme. So this is the last question for today. After that, I am going to give you a homework question. That's it. So here you have to tell that the Reserve Bank of India has said that the sovereign green bonds will be permitted for the foreign investors in the IFSC. So which of the following statement is correct in regards to the sovereign green bonds? Which of the following statement is correct in regards to the sovereign green bonds, that you have to tell me. So first statement is that based on the announcement in the union budget for the financial year 2022-23, the government of India issued sovereign green bonds in January 2024. No, it was issued in January 2023 because it was announced in union budget of financial year 2022-23. Okay. Payment of principal and interest on the issuances under this framework are not conditional on the performance of the eligible projects. So this is correct. Actually, they are not conditional. The government has to provide, because it is the sovereign green bonds. That means the government green bonds, we can say the government is taking the money. So the government has to provide the interest and the money back even if the project is working poorly. So that is the duty of the government. Okay. So this is correct. It is not conditional. The GFWC, that is the committee that looks after the projects that are run under the sovereign green bonds. So this committee is chaired by the It is not chaired by the Governor of India, okay, Governor of the Reserve Bank of India. It is chaired by the Chief Economic Advisor, the Government of India, okay. So the chairmanship of the GFWC is with the Chief Economic Advisor of the Government of India. At present, the foreign portfolio investors registered with the SEBI, they were permitted to the to have the sovereign green bonds through different routes available, but now it has been said that the foreign investors that are registered in the International Financial Services Center or that are eligible foreign investors in the IFSC, they will also be able to have the sovereign green bonds. So that is the complete idea. So here B was the only correct statement. Okay, so this is it for today. Let me give you the homework question. So this is your homework question, that is related to static as well as your current affairs, because the MPC, the Monetary Policy Committee, was recently released its statement. Okay, it recently released its statement. So you have to tell that which of the following statement is correct, is or are correct. Okay, so this is it for today. There is a announcement from EduTap also that we have brought for you the comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook you are able to know much about the examination, okay, the pattern, the syllabus of the examination, as well as with this guidebook the previous year questions are also provided, and this is absolutely free of cost to save your time, to save your efforts. So you can easily download this guidebook. Okay, and the link for this guidebook is provided in the description box below, and this is absolutely free of cost, so you can download this guidebook. So this is it from my side. I hope you liked the session, and thank you very much. Do tell me that how many marks you have got out of 10, and do give me the right answer of the homework question. So this is it from my side. Thank you very much for joining the session. You are most welcome, Sorish. You are most welcome, Nilesh. So let's meet in the next session, that is on Tuesday, for your Finance 360. Okay, so thank you very much. Thank you, everyone. You're most welcome, Nitya.